Jeff, we've made some progress going through our Magnificent Earth 7 contest that we put together, where we each picked a stock going head to head against one of the Magnificent Seven. It's time to talk about how the stocks that we picked that we said could be more magnificent than Meta Platforms have stacked up. Are you ready to see how we've been doing?
Yeah, this is a tough one because Meta's been on quite a run, but let's dig in and see where we landed.
I'm going to share a Google Sheet. If you look in the description in the YouTube video, you can get the link and you can go to the Google Sheet and look at it. But this is our Magnificent Earth 7. You see on the left, the actual Magnificent 7. And August 22nd is the first trading day after we launched this little contest against one another. You see in the middle, my Magnificent 7. And then Jeff's on the right. Jeff's has done quite well for this short period of time. Mine are finally making money, Jeff. They weren't for a long time. And of course, the actual Magnificent Seven continues to be magnificent, while our picks have not been quite so much.
Yeah, it is definitely living up to its name, but we're trying. We're trying.
We're trying. It's a fun contest, and I do think one of the reasons that we decided to do it is the reality that so many people, if you own index funds, you already have a ton of exposure to the Magnificent Seven. And if you're looking to benefit from some of the things that have made them so great as investments, but not necessarily invest more in these companies, these are some interesting stocks to look at. So here's the two that we picked. I picked Alphabet. Now, Jeff, I'll let you share with the folks why you think I was cheating when I picked Alphabet. And you went with Pinterest. Here's how they've done since then. Of course, Meta has rocked it. My pick, Alphabet's up about 17%. Your Pinterest is up around 29%. So first of all, tell the good people at home, why do you think I was cheating?
The whole point of the contest was to pick a company that had something to do with the Magnificent Seven that it was going up against. And you did clear that hurdle, but you also picked one of the Magnificent Seven as your stock pick, which I think is cheating. And when we did this on our podcast, other people agreed with me, but whatever. It is what it is. Here we are. I'm beating you on this one, so I can't complain too much.
Yeah, you are. And let's be honest, since August, if you own a stock that's up 29%, you ought to be pretty happy with that return. Let's start with Pinterest. What's going right for Pinterest?
Before I do that, why don't you tell the good people who sponsors this lovely video?
Oh, good point. Good point. And who we are too. He's Jeff. I'm Jason. This is Investing Unscripted. The Motley Fool is the sponsor for this video. The Motley Fool has a great deal for you too. If you're looking for even more great stock ideas, you should check out our special link. See it on the screen right there. It's fool.com/unscripted. Again, fool.com/unscripted. Go to that link and check it out. The Motley Fool is going to give you its 10 best stocks to buy right now for free. Go check that out. Okay, back to Pinterest.
So I have to admit, I've been my confidence in my pick here has been shaken a little bit, or had been shaken a little bit. But the last quarter results were actually a little bit better than I was expecting, and perhaps are an indication that the company is on the right track and getting back on a growth footing. So I'm going to share some slides here from their Q4 earnings presentation. So here we have Pinterest's revenue, and they break it down. You can see a little chart here, but on the right-hand side, they break it down by the whole globe, and then also US and Canada, Europe, and rest of the world. And as you can see, this is pretty strong growth for this company. So there's really not much to complain here. We always see rest of the world doing really well, but it usually outpaces even all the other categories. This time it was a little bit behind Europe, but you have to also remember where the size of these markets are, right? So the largest is by far US and Canada, and that was by far the slowest growth. So the numbers can be a little bit deceiving just on the surface. A lot of the growth is happening in some of the smaller markets. The hope is over time that maybe those markets catch up and become bigger contributors to overall revenue, but really not much to complain about here.
No, I
Moving
think
on
there's a
to
lot to celebrate, to be honest, Jeff. Remember,
Yeah.
this is, as you see the run rate for revenue going back a year ago, 4% revenue growth. That was coming out of a period where revenue was actually flatlining and declining. So this is a reversal of a trend and an acceleration, and we've all kind of been waiting for this.
And this, I was going to get to this later, but since you mentioned it here, I might as well just talk about it now, which is this is what we were told we were going to see by management. They're trying to find a way to drive more revenue through the platform. And they're doing that by one of the ways they're doing that, in addition to advertising, is by trying to make Pinterest more shoppable. They want you to come to Pinterest, get an inspiration, get an idea, and then be able to click on the idea right in the app and be brought to the page to purchase that thing. And every time that happens, Pinterest gets a little bit of a piece of that transaction. So let's say you're looking at garage organizers and you find a great shelving unit that you think would be perfect in your garage. You click on it, it brings you to whatever third-party site. And because you were brought there by the Pinterest app, they make a little money if you buy something. So That's what they're trying to do, and this is evidence, at least in the short term, that might be starting to pay off. All right, I'm going to move on to another slide here. So here's another one that is obviously tied to revenue, but is showing a lot of good progress here, and that's their monthly average users. The same story that you were just saying, Jason. We see the growth on the right hand side in all the different markets, but we see an acceleration of year over year growth going back to Q4 of 2022, 4%, all the way up to the 11% we see in the most recent quarter. And then continuing on that story, here we have average revenue per user, again, broken down by global, US and Canada, Europe, and rest of world. Same thing. You're seeing the growth here. Again, the slowest amount of growth in the largest market, but still, all three of these slides show that whatever metric you want to look at, there's reason to have hope that Pinterest is on the right path and can hopefully continue to accelerate these numbers from here. Without going too much deeper into a lot of the other numbers, I don't know. I was a little bit worried, and then this last quarter made me feel a little bit better. So my confidence is a little bit higher. And over the past several months, just looking at our little contest here, it seems like the market's rewarding Pinterest for the progress they've made as well.
Yeah, I think you're right. I want to share a little bit from Alphabet as well. This is the company that has proven out the power of web-based advertising with its Google platform, YouTube, and of course the growing Google Cloud business as well. Fourth quarter revenue was up 13%, finished the year up about 9%. That continued to grow. Strong margins. That's good because that means that value per ad has stabilized. And we know that was a challenge over the past year and a half. We went through some real softness in the ad market. Very profitable year. And if you break it down by the different segments of the business, you see continued growth where it matters. Again, Google search, this is essentially all ad revenue and grew substantially in the quarter. We continue to see YouTube's ad business do well, continues to not tell us a full breakout of YouTube's premium value, that they keep that close. And I understand why they do. But I can tell you, if we see the ad revenue continue to grow, then you know that YouTube premium revenue is also growing. And then you look down here at Google Cloud, it also continues to grow. There was some concern that that business was starting to soften. The growth was slowing across a lot of the cloud providers, but it seems like it's continued to have pretty solid momentum and it's delivered really well. At the same time, like so many of these other tech giants, we see Alphabet's doing more with less people. It's reduced its headcount by about 8,000 from the end of 2023 to where it started the year. So it's making progress to try to maintain its efficiency and generate the high margin returns on its business that it can. And it's paid off quite well. Again, the stock has not done as well as some of these others, but Alphabet continues to be a big winner. And even with some of the challenges that it faces on the regulatory side, antitrust concerns, it's a really healthy business. And we see the ad market is healthy, and that's certainly carried over too. Jeff, I think we should talk a little bit about Meta. This is the one that's done the best. I'm going to sing the high notes of its results. And then after that, let's talk about the three and maybe where we each see opportunity for investors looking to put money to work today. I want to start here because we went through a period of softness in the ad market where Meta and Alphabet and basically everybody that sells ads saw the value per ad placement go down, and that has started to affect the average revenue per user. That's strengthened. But the big thing that's happened for Meta is over the past 2 years, really, we've seen this number start to grow again, which is average daily people. It's average users is what most platforms call this. So this is the daily number. It's up to about 3.2 billion and knocking ever closer on a monthly basis to 4 billion users. It is remarkable that half the planet, Jeff, more than half the planet is using a Meta social tool. It's just remarkable to me. Let's get into the key numbers that matter. So revenue, advertising revenue of almost $39 billion. That's a record. Total revenue of $40 billion. They're actually starting to get a little bit of traction with Reality Labs revenue. If we look at that breakdown here, again, apps revenue was $39 billion and then almost $1.1 billion Reality Labs revenue. That's the most they've ever generated. So starting to get a little bit of traction there. This continues to be the thing that's going to happen. $4.6 billion operating loss at Reality Labs. Continue to spend money in that segment of the business. Even as expenses have come down and expenses as a percentage of revenue have come down, as the year of efficiency has turned into another year of efficiency, we need to be cognizant of this. So again, CapEx came down from 2022, but this number is going to go up. We've already been told to expect higher investment in 2024 than we saw in 2023. and continued operating investment in Reality Labs. So even as the ad market and the overall health of the social platform side continues to be very strong, Zuckerberg is still very focused on building out the metaverse side of the business with Reality Labs.
And I was dead wrong on Meta. 2 years ago, I thought the cash burn in Reality Labs was going to be an anchor around the stock and the company. And they proved that, like a lot of these big tech companies who have maybe chosen to be less profitable at certain times than they could be, he showed that he can put the brakes on the spending in other places to bring profitability back in line and still burn a ton of cash on Reality Labs. And it
Right.
just goes to show, like tying that to all of these companies, they own our time. They
Yeah.
own our video watching, our ad, our Google searching, all that kind of stuff. And as long as we're on the internet doing things, all three of these companies stand to benefit. They're all really impressive.
So with that said, Jeff, if you're looking at the three, is there one that stands out to you as worth buying?
I would have to lean towards Alphabet. They have at least right now, the leading search engine, the leading video platform. They have all the other bets division. They just, there's so many ways that they can leverage their influence and bring in money. I'm a little bit, I want to do a little more waiting and seeing on Pinterest. I wonder sometimes if they've reached their peak number of users. I don't know how many more new people are going to come to Pinterest.
Yeah, and it's really interesting too. This might surprise people to hear this, but Meta, if you value it on a cash flows basis, which I think at this scale, really for all three businesses, they're cash flow positive. They generate free cash flow and operating cash flow. That's probably the best metric to really be thinking about valuation. Pinterest is the most expensive. It's the smallest, and they've returned to growth, right? So there is some idea that once they get a little more scale, their profitability could really grow a ton, right? They get that leverage. If that happens, we could see it quickly become very cheap, but it trades for almost 40 times free cash flow, whereas you're looking at 28 times for Alphabet and 29 times for Meta. And if you look at them on an operating cash flow basis and take out the CapEx cost that affects free cash flow, Meta trades for 18 times operating cash flow, which is a reasonable valuation, surprisingly. But I tend to agree. I tend to lean more towards Alphabet because I think it has more levers to pull. It's exposed to more markets right now. And Meta is still betting so big on the metaverse being its thing, that its future disruption, the future cash cow for it. So I do tend to agree. I think Alphabet to me is the one that's most attractive. With Pinterest is one that might be the sleeper, right? It's the one that most people might looking past as having maybe more potential than we're giving it credit for.